Hello and welcome to TA for Traders. It's Friday the 20th of October. In this video we're going to do the usual for our stock videos, and that's cover 2 UK and 2 US stocks. In the UK we're going to start with Acacia Mining. Had a very good day yesterday. It's off today. We'll look at the technicals. There was a golden cross on the 20-50 day moving average. We'll then move on to Unilever, where there was bad figures coming out, or disappointing figures coming out from the company yesterday. We'll see how that's affected the technicals. In the States, we'll look at Ignyta, code RXDX. They had a secondary offering overnight, 125 million. That priced at 16, 3.9% discount. We'll see how that affects the technicals. And then we'll look at Apple, where the shares fell just over 2% yesterday. This was due to the iWatch in China not registering or something. But anyway, affected sentiment. We'll catch up on the charts on Apple. Let's look at those charts. So starting with Acacia Mining, this is the weekly, and you can see it's been a very volatile share. Crashed down through this year, did find support at the 2015 lows, around about the 160, and has been base building from that time. Had a good day yesterday, although on this chart it hardly registers. The RSI has started to move up in a shallow uptrend. That's good, but it is still below 50, so not really indicating any positive momentum. But the MACD did turn with the short term above the longer term, so a better picture there. Resistance levels on this weekly, you can see that first resistance comes in about 230 to 240, and then the next resistance above there 270, 280. Looking at the daily picture, and you can see that the 20 and 50 day moving averages are very close together. The 20 has actually just crossed above the 50, so a golden cross there, which is a bullish sign. You can see also that yesterday we did break above the resistance levels, although we've moved back down, but they now become support, so we're falling into support, and we've got the support of these rising moving averages. Also positive is that the RSI did tick up above 50 yesterday, presently at 56.66, and you would expect some follow through buying. And the MACD as well are back above zero, and the short term is above the long term, and that's just starting to flash a buy as well. On the 4 hour, all the moving averages close together. Here the 20 hasn't yet crossed the 50, but will do if we hold above where we are at the moment. That will be a golden cross. They're all together, which is I always believe is a good signal for a break. And the only slight negative is this the last candle. You can see that we did go into new above the previous candle, and the body, the open, was above the previous close. If this close is below the previous open, that's an engulfing, bearish engulfing candle, and will signify further short-term downside. So be aware of that. Keep an eye on it just the next couple of hours and see where do we get that engulfing or not. If we don't, I would suggest that it still looks good. Short-term rally, towards that resistance, which I've already mentioned, at 230, 240. Moving on to Unilever. And yesterday we had a bad day, and you can see that on the weekly it's brought us below the support of the 20-week moving average. Could still be a flag in the bull run. it would be quite bearish for this weekly picture if we go below the low of the week of 25th of September, which is 42.20. Presently 42.34.5. You can see we've lost upside momentum. The RSI in a downtrend, 49.73, and the MACD moving down in a bearish fashion as well. On the daily, you can see the breakdown. We didn't find any support where we should have at the 50 or the 20-day moving average. It's broken the trend. Minor support at 42.07, but below there it would look vulnerable to be testing the 200-day average, which is down at 40.80 at the moment. Again, momentum was lost. RSI down at 36.3, and the MACD back below zero, and the short term is below the longer term. On the 4 hour, you can see the extent of yesterday's move and that we are testing supports. Marginally oversold on this, down at 25.62 on the RSI. So we may see short-term bounce, but really does look vulnerable for further downside with this negative momentum indicated by the RSI and the MACD. Okay, moving across to the States. Ignyta, as I said, it came out of a secondary at 16. You can see that it's testing long-term resistance, which goes up to about 19.5 from the present level. We did have a double top there, and we're now testing that again. Did have the nice base build. Really, one would expect, given the momentum, that we will get a break. Will it be imminent? I'm not sure, because we've had 6 up weeks now, so a consolidation should be expected, and we are overbought on the RSI, 77.68. The MACD still showing positive momentum though. On the daily, you can see that we've had a gap formed, and that it was from the it bounced from the 20-day moving average. What I'd like to see is that we don't come down and fill the gap, so we need to hold up to these levels and let the moving averages catch up. The RSI is indicative, and the MACD, of solid upside momentum. And on the 4 hour, again, it does look like we've moved away from the vulnerable position of filling the gap, which was good. Again, it was a bounce from the 20, which was good, and we've got solid momentum. So really, to conclude on Ignyta, on the weekly, it looks like there should be some consolidation. That consolidation hopefully won't fill the gap, which is a bullish gap that it's left, and I would suggest that in a week or two that the bullish progression will continue. Finally, moving on to Apple. This is the weekly picture. You can see that we keep coming down, testing the support of the 20 week moving average, and moving up. That 20 week is actually now starting to roll, so be aware of that. If we come back and test it again, it might be moving down and would be a negative influence on the market. You can see this loss of momentum in the RSI, which is drifting. It is still above 50, but it's in a shallow downtrend, presently at 57.23, and the MACD as well are confirming this formation of a downtrend, with the short term moving below the longer term as they both move downwards. On the daily, you can see that we did pull back to the support of the 20-day. That's good if it can hold. It is still moving up. The 50, however, is rolling and will be a downside resistance factor at 158. So if we bounce up to that level today, expect a pincer formation for the short term between that 50 and the 20, and then we'll see which becomes the dominant. RSI has ticked down below 50, 47.56. MACD short term is still above the long term, but the short term is moving down quite quickly. So really on this daily, you'd hope that the 20-day holds. If that doesn't hold and the 50 moves down, the medium term picture would be bearish, especially if we move back down towards the 152 level. On the 4 hour, you can see that we've fallen below the downtrend in 50. The 20 is rolling. I will suggest that we need to get back above that 20, which is at 157.2, to stand any chance of it not rolling down. Once it starts to roll, if it comes down and crosses the 50, that will make us vulnerable to test the support at the rising 200 at 153.79. Again, we've lost upside momentum. RSI at 45, and the short term MACD just moved below the long term and is shouting a sell, so slightly vulnerable on Apple. Thanks for watching this video. I know when I do these stock videos I have to rattle through them, and there's 3 charts on each, and you probably get bored of my voice. If you've got this far in the video, many thanks for sticking with it. Please remember, these videos are for information only and are not an investment recommendation. Please do read the disclaimer.